Okay, I'm going to talk today about Globex Mining Enterprises, which is a junior exploration company, but we're a different kind of company. We're a company that actually makes money, and thus we don't dilute our shareholders. So I'm going to go relatively quickly because this, as you'll understand as I go forward, we have a lot to talk about. So what I'd like you to do as I go forward is focus on the value of the assets of Globex. Most other junior companies have one or two projects, and they go and they raise money, they explore those projects. If they're successful, they raise more money and explore more. If they're not successful, they go and raise more money and buy another project. So it's a constant process of diluting their shareholders. We don't do that. So the thing I'll start talking about, first of all, in generality about the company. Globex does anything in the mineral sector that will create value. So we have precious metal properties, base metal properties, lots of specialty projects and industrial minerals. And then we also have a business of royalties. So putting it in succinctly, we are a diversified company. We only work in areas of low political risk, particularly Eastern Canada, Germany, and the United States. We make money from option sales, joint ventures, and royalties. Currently, we have about $25 million in cash, shares, and marketable securities, and no debt. Because of that, we don't keep going back to the market to raise more money and dilute the shareholders. So a lot of people consider our company a property bank or incubator. We specialize in acquisitions, and we upgrade those assets through exploration and intellectual input. We generate revenues, as I said, from option sales, royalties, and so on. And the fact that we have this income means that we have increased exploration expenditure, less shareholder risk, and we avoid debt, while at the same time increasing the value of our portfolio. Just to show you how over time we have increased the number of assets. We're currently, the red lines are the number of assets. That's 240 mineral assets. I can't think of another junior company that's anywhere close to that, including 92 royalties. So number of shares, we have never done a rollback. We have 55.3 million shares out, fully diluted 58.1 million shares. Management, basically myself and my wife, have 12.4% of the shares, which we've paid for. The board of directors, unlike a lot of other companies, there's no doctors, there's no dentists. It's 3 senior geologists, a mining accountant, and a senior finance professional. We're also on the senior Toronto Stock Exchange, on multiple exchanges in Germany, including Frankfurt, and we are the first company, exploration company, to list on the OTCQX International in the US by invitation. Just to quickly, the board of directors, I'm the president, I'm a geologist with over 40 years experience. Ian Atkinson, again, another geologist with over 40 years experience. He's currently a director of Kinross. Hans van Hoof, he's a director, an international banking specialist who's worked in various types of banks over the years, specializing in arbitrage and derivatives. Diane, who is my wife, she's an accredited director. She's retired now, but she spent over 30 years as CFO, corporate secretary of the company. And before that, 18 years as a revenue planner and senior analyst for Noranda Mines. And Chris Bryan, a retired geologist, a mining analyst, who is a mining analyst, portfolio manager for Caisse de dépôt et placement, one of the largest investment funds in Canada. So talking about the assets quickly, we have 240 projects, 122 are precious metal projects, 64 are base metal or polymetallic, 54 are specialty metals and minerals, things like bismuth, molybdenum, manganese, lithium, scandium, and so on, uranium. Of those projects, 92 are royalties. We have 9 active options. Our options are constructed so that they're usually about 4 years in length. Each option a year provides cash payments, share payments of the other company, exploration or development expenditures, and at the end, we keep a gross metal royalty. I should point out that gross metal royalty is something that we developed. It's unlike a net smelter or a net profit. There are no expenses charged against the gross metal royalty. So, so for example, if on a particular day, for example, there's 100 ounces of gold produced and we have a 3% gross, we get 3 ounces of gold. Nothing taken off from the metal produced. 54 of our properties have historical or NI 43-101 resources, and 40 of our projects had former production. Just the distribution of our assets, the large gray map in the center is the Abitibi of Quebec and Ontario, where a lot of the gold and base metal projects are found in Canada. All the gold-colored stars are gold projects we own. The blue squares are base metal projects. The red stars are critical metal projects. The green diamonds are industrial mineral projects. And the half green and half red star industrial mineral and critical metals. And our projects are in the Abitibi, in New Brunswick, Nova Scotia, and in the US, as well as Saxony, Germany. We have the criteria for us acquiring properties that the projects should have one or more of the following: historical or NI 43-101 resources, drill intersections of economic interest, past production, mineralized showings or drill targets, whether geochemical, geophysical, or geological, and be on major structures such as what's called the Cadillac Break or Porcupine Destor Break, or in important mining camps like the Noranda, Val-d'Or, Malartic, and so on. And you'll see some of these types of projects. Just to show you how we're diversified and we acquire things when they become available. We acquired, for example, the Francoeur Ironfield Lac Fortune Gold Mines project, including infrastructure. We acquired Montalembert, which is a high-grade gold on surface, Dalhousie, copper nickel over a 6-kilometer strike length, manganese and vanadium, New Brunswick and Quebec, rare earths in Quebec and in Arizona, 100,000 ounce gold deposit in New Brunswick, multiple lithium projects in Quebec, and scandium project in Quebec, which is a specialty project. And I'll talk about these projects as I go forward. Just to give you an idea of the kinds of deals that we do, this was a map showing the project called Francoeur Ironfield Lac Fortune. Agnico Eagle have this project over here where you can see my arrow says Wasamac Mine. They're putting it into production. Along strike, we have a whole series of deposits. We sold, which was Yamana at the time, now it's Agnico Eagle, the project for $15 million in cash paid over 5 years and a 2% gross royalty. So any mines found on the project, we end up with 2% of the gold produced. And you can see that it's very good potential. All these little squares here indicates areas where there was underground mining or open pit mining on the property many, many years ago, as well as the Lac Fortune project. So we've spent about $2 million in exploring, developing the property, putting it together over a number of years, and we sold it for $15 million. Very nice profit. This is a map of the Joutel mining camp. Again, over a number of years, we picked up most of the mining camp, including the Joutel mine, which is a copper deposit, the Poirier mine, which is a polymetallic copper, zinc, silver, gold. There's already about 2.5 million tons outlined here. We have the Eagle mine, which is a former gold project, which was mined by Agnico Eagle. We've optioned this project off to a company called Maple Gold Mines, and they're paying us cash and shares and doing exploration. We also have this long project over here. It's about 11 kilometers in length of the same horizon that has the Eagle and the Tel Bell mines. And The company that we optioned this to is Orford, again, paying us cash, giving us shares, and doing exploration work. They just paid us the second year option payment, and they're planning a drill program for this winter. And we have new ground right on strike with a whole series of airborne electromagnetic and corresponding magnetic anomalies that we want to actually work on this winter and potentially carry forward ourselves. So again, we acquire the property over a number of years. We end up with 3 out of the 4 deposits in the mining camp, and then we generate revenue by optioning these projects out to other companies. Another project near Rouyn-Noranda, this is now held by a company called Labyrinth out of Australia. The project has 3 million tons of 5 grams gold. There's a ramp and 3 levels, coarse visible gold. You can see here all the little dots, which are places where it's in sort of an orangey color. That's a ½ an ounce gold or better. The yellow is 1/3 of an ounce. They're currently working on this project, trying to carry this project forward to production. We have a 3% gross royalty on this project. This is a project north of Rouyn-Noranda, quite a large project, about 15 kilometers long by about 5 kilometers wide. There is a deposit there called Magusi. There is about 1.6 million tons of copper, zinc, silver, and gold. The ramp has been started, the roads are in, the power is connected to the property, and the company have just informed us that they'll be paying the next year option payment, and they're financing a drill program to carry this project forward. With the deal on this project is $12.25 million in work. I'm trying to remember, it was about $6 or $7 million in cash payments and a 3% gross overriding royalty. This is a project for lithium up in the James Bay area. The rectangles in blue are claims that we own. We optioned this property to a company called Brunswick Exploration. We also have an area of influence indicated by the dashed lines on which we have a 2.5% gross metal royalty. Now, this was a 4-year option. Last week, we announced that Brunswick decided, never mind the 4 years, and they paid us all the shares, all the cash. They'd already met the minimum work requirements on the project. So now they paid us everything up front. And so we presumed that they were going to make an announce of positive results. Over here, where you see the red stars, they had found lithium oxide on surface, so spodumene-bearing pegmatites. Last night, and it's available this morning, they made an announcement on the first series of drill holes. They completed 5,000 meters. They've announced there was in total 36 holes. They announced 14 of them, the holes of up to 2.57% lithium oxide over 25.8 meters, 50.6 meters of 1.06 lithium oxide, 16.2 meters of 2.75% lithium oxide, and so on. We'll be putting out, hopefully, a press release this morning about it. So right off the press, good results. So now we see why they paid us up front. They wanted to tie up the property completely. You can see the size of the property. That arrow indicates just this section here is 19 kilometers long. Another lithium project where we have a 0.5% royalty on a proposed open pit. This is owned by Sayona. They already have over 100 million tons of grading 1% lithium. They have a nearby mill in operation, and they are in the final stages of permitting this project to production. So we have a 0.5% gross on the property, as well as a major shareholding in another company that has a 1% gross on the project. This is a map showing the Chibougamau mining camp, and this mining camp is one of the main copper gold mining camps in the Abitibi. We acquired over a series of years about half the mining camp. 5 former copper gold mines, 3 extensions to down depth of copper gold mines, 2 unmined deposits, plus a very large, over 1 billion ton iron vanadium deposit. We spun this out as a dividend to our shareholders, and then recently we did a deal where the company, the subsidiary company, optioned out the West Block to a company for shares, cash payments, and a royalty, a 2% gross metal royalty. And we also optioned off the East Block through a letter of intent where they have to complete a 6-month due diligence. There's about 3.5 months left. And at the end of that, they have the option to purchase the property for $11 million in cash plus shares over a 3-year period. We also have this, like I said, this iron vanadium project where we have a 1% gross on the iron production. So just to show you, this is the iron project, a very, very large project. They just completed a preliminary economic assessment. It shows a net present value of 1.6 million, which is million. It's $1,600 million US. Payback 1.8 years, IRR after tax 43%, annual revenue 235 million. We have a 1% gross on that, and the company that we spun out has a 2% gross. Just to show you significant potential of some of the things that we were able to acquire in the camp, this is a property called Berrigan, which was worked for zinc. And you can see that there's significant zinc values, but at the time, gold wasn't worth very much, $35 an ounce. But look at the gold values, incredible gold values here, incredible silver values. So lots of things on that property package that have to be reassessed in modern terms. Here's a short slide showing an area where we went and we stripped an area and found massive sulfides on surface for copper gold, and then we drilled it down to 450 meters. The deepest hold is 2.49% copper, 4.24 grams gold over 9.5 meters, and 4.14% copper and 0.55 grams over 5.55 meters. This is an area where there was indications, there was alteration, but there wasn't a deposit found. The zone is completely open to depth, and there are parallel zones. We retain a 3% gross overriding royalty on this project. This is a property we just picked up, and just show you some of the areas where we work for our own interests. This is on the east of Rouyn-Noranda on the Cadillac Break, which is one of the main gold localizing structures in the Abitibi. Over here, you see this mass of green dots. Those are drill holes, and this is the Hosco Haven deposits where Globex has a 2% net smelter. But you see where this property line ends, there's very little drilling. Most of these holes do have gold values. Over here, there's a zone with really good values, as well as over here. And then in this area here along the strike, there's more drilling, and there was a shaft, inclined shaft, and we've put a 3-dimensional model together, and we want to do drilling on that. We think that there's a lot of potential, as well as over here in this area here. So this winter, we'll be drilling for gold on these projects. There's highway access, excellent geology, gold from one end of the boundary to the other end of the property, and open at depth. This is a project we picked up by staking in towards the Chibougamau area near Waswanipi. We picked it up because there was previously a mini bulk sample over a strike length of 123 meters. It graded 20.8 grams gold cut when the gold above 1 ounce is taken out. If you leave the gold above 1 ounce in, it's 28.9 grams. You can see here, this is a sample grabbed on surface. You can see the gold sticking out of the rock. This is from a channel sample, which is this channel sample over here, 3,310 grams over a meter, or 96.6 ounces per ton. Lots of good values, 118 over a meter, 510 grams over a meter, 108 grams over 0.75 meters, and so on. The property has been mapped. The airborne geophysics has been done. There's been stripping done, and we are looking for a partner now to take on the property and carry this project forward. Quite a large property. This area you're seeing in this map is this little area, just that little dot down there. So a very, very large property with lots of potential. This is a property in which we have a 2% net smelter. It is owned by a company called Radisson, who are currently drilling, and they are drilling various trends. This is one trend here. This is another trend, another trend. The colored areas are areas where they've developed some tonnage. They're doing infill drilling. You can see some of the drill intersections, 13.8 grams over 2.4 meters, 8.6 grams over 2.2 meters, and so on. 45.5 grams over 2.1 meters, 57.48 grams over 2.8 meters. We bought this project from another company. This company, Radisson, is drilling, taking on all the risk, doing the expenditures, adding value to the property. All the area over here is completely untested, and then further along to the east is our property. So what you were looking at over here was called the Kawagama, where we have the 2% net smelter. Then we also have here the property, which is a Central Wood Cadillac project, where there's two former producers, and we also discovered a small deposit, 250,000 tons of 17 grams gold right near surface. And we also, along strike of that, we have a 1% net smelter royalty on the New Alger property, also being drilled by Radisson. So what you see here, the yellow line is the gold localizing Cadillac break, and all these squares are former mines on this structure. So lots of potential. We have ounces in the ground, we have royalties, and other people are working to create value for Globex. A project up near the town called Duparquet. This is a project on what's called the Porcupine Destor Break, which is another one of the main gold localizing structure. There's already 4.17 million tons grading 5.4 grams gold cut, or 6.36 grams uncut. So we were talking about 727,000 ounces cut, 853,000 ounces uncut. We've done a deal with a company called Etmerer Metals. They have a 5-year deal. They have to pay us $10 million in cash, 15 million shares, do 12 million in work over the 5 years, and Globex retains a 3% gross metal royalty. The second year option is coming up very, very shortly, and they intend to renew. They just announced drill results, very, very positive drill results last week. This is just to show you, this is a project in Ontario. Again, a large project, multiple zones. There was a model done here at $1,200 an ounce. And they've got 250,000 tons of 3.5 grams, or 41,000 ounces. Large project, lots of exploration potential, 100% owned by Globex. We're looking for a partner to carry this project forward. Just to show you one of our more oddball projects, this is a scandium project, and this is a project near Schefferville in Quebec, near the Labrador border. This circular structure is a particular rock type that has scandium and rare earth mineralization. A company called Imperial Mining have outlined on that structure a deposit about 21 million tons of scandium oxide. And you can see here all these little diamonds, blue diamonds. On our property here, we have half the structure, and we have scandium mineralization on surface. They have done a study. The NPV, net present value, of their project is $1.2 billion. And they are exploring, have done the metallurgical work, and they want to bring this to production. Next summer, we intend to go into that project, do the detailed mapping and possibly some drilling. We'll see if we can carry it forward. Scandium is very important in the aluminum business. If you want to make something like an airplane or a boat out of aluminum, you have to rivet together. If you add a little bit of scandium, you can weld the aluminum. It saves time. It makes, for example, if you're making a shell of an airplane, it makes it lighter. It's faster to construct and more rigid. This is a map showing our project in in Saxony, Germany, near Freiburg. We put together a package of about 164 square kilometers, 35 kilometers long by about 5 kilometers wide. We did research and found that historically there was about $500 million worth of silver produced in this area over a 750-year period, all done with pick and shovel, no drilling, no geophysics, no modern work. So we put together the project. We did a bit of work, amassed more information, and then optioned it to a company called Exelon while getting cash payments, share payments. They've earned their interest now. We retain a 3% gross overriding royalty on all the silver and gold produced from the property, and a 2.5% gross overriding royalty on all the rest. They have done exploration on the property, a number of drill programs, as you can see here, and have silver values, good silver values in all these areas, and intend, according to the latest information, is to spin this out as a dividend to their shareholders. We will get shares in the new company because we have shares in Exelon, and we will benefit of all the new work that'll be done by the company. So that was just a quick resume. I invite you to go back to our website, take a look at all the assets that we have. Remember, I'm only showing you a fraction of the 240 assets that we have. Giving you a quick recap, the important points about the company. We have very few shares out, only 55.3 million shares, and we have a history of not diluting our shareholders. We have an experienced and prudent board. We have income. That makes us much different than the other junior companies out there. We generate income. The fact that we generate incomes means that we don't have to go back and dilute our shareholders by raising more money on a yearly basis. We own our assets. We own all of our properties. We own our office building. You can see a portion of one of our office buildings there. We own all of our vehicles. We own all of our assets, right down to the pencils. We have no debt. As I said, at the start, we have about $25 million in cash and shares of other companies. We have guaranteed revenue, for example, over the next 2 years of $6 million from Agnico Eagle. We have ongoing options which are producing revenue. We have no debt. We only work in areas of low political risk. And we have a board that are experienced people. Excuse me. We have a board of experienced people who work in the business. So again, please focus on the value. Thank you.
All right, Jack, this is all the time we had. Obviously, phone is ringing on your side, getting busy. 240 project needs a lot of time, no debt, cash in the bank, a very, very different model than a lot of juniors companies that are out there. So thank you for flying us through the presentation, Jack. Obviously, for people who don't know, there is a huge mining boom right now in Quebec. Globex has very, very nice properties located both in the James. Chibougamau was in the center of the talk in the last few months also. So we'll be happy to following you. So thank you very much for joining once again, Jack. Sadly, time is already up.
Thank you very much. Take it easy.
All right. Thank you. Bye-bye, Jack.
Bye.